Can you invest in SBI Balanced Advantage Fund, a new NFO? So that is the review we are going to see. And I will say this is the need of the hour and they are launching at the right moment. So hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan. And today's topic is SBI Balanced Advantage Fund, a new NFO, a new fund offer, a mutual fund which is getting launched for the first time. It is called as NFO, similar to IPO in stock market, right? So what is this NFO period consist of? And it is already started 12th August. So today NFO is just kick started and it is there till August 25. If you are somebody who is looking to invest in NFO, and this is the thing you should look at, because this is unique as far the funds which got launched in the last few months, I will say, because everything has been flexi cap or anything related to equity completely, but this is something like balanced advantage between flexibility between a equity and debt. So that is the asset allocation model, and that is called as balanced advantage fund. Okay, so what is the expense ratio? As it is treated as an equity fund, the expense ratio at the max can be 2.25 percentage. And as I say regularly, in case of equity, if the fund is getting the size of the SBA Balance Advantage Fund is going beyond 10,000 20,000 crores, this expense ratio comes down to less than 2% or less than 1.7%. As and when the things progress, this ratio will come down. So this is how the expense ratio is going to perform in the future, right? So let's go back and check whether you can invest in this fund. I'm just going to show you the data, the leaflet of SBA Balanced Advantage Fund. Just look at equity markets goes through cycles, so does the investor behavior. When we will go and buy, whenever the market is going up and up, we will go and buy. Let me show an interesting data. uh, this is the data I just wanted you to show. So what we do generally is that positive outlook is there, means slowly optimism will come in and thrill to invest more. That is what will be there with most of the investors, and extreme overconfidence. I will say mostly I think we are between thrill to invest more or between overconfidence. That is the status we are in, and we will be in the euphoria mode. We will be buying more. We don't know. I don't know whether we are in this any of these three stages. This is where the maximum financial risk is there. And then the complacency or ignorance, market will come down and people will not see, an anxiety whether should you exit or should you hold. Nothing will be there, nobody can understand, and it will be denial. We will say that market will for sure go up, for sure go up, and after some time your money will stuck in and you will be in the fear mode and panic will start, and that is where you will start selling off like anything. The minimum financial risk, that is where the stock will be there, but you will be selling it off and hope for survival, and relief will slowly start, because stock market from the bottom will start to growing go up, and the optimism will start kick-starting. So this is the extreme cycle of stock market. Like it goes up, it goes down, but people will buy like whenever it is up and people will sell whenever it is down. So it is difficult to predict as a investor in the stock market. And one more interesting data what they had given is the PE range of S&P BSE Sensex. If you look at the data, the average value is between, if it is between 15 to 20, the average monthly net inflow has been 4,339 crores. And when the expense and the PE range is about 20 to 25, the flow has been increased to 11,986 crores. And when it is super expensive, still the net inflow has been around 2,163 crores. And another aspect is because positive outlook and extreme optimism, I'll say, it is driving the equity mutual fund, and that is the reason the equity flow has been going up and up and up. So this is what will happen at any point of time. Whenever the cycle is up positive, it will keep on going up, right? Now let's go back to the chart which I was showing, which is the interesting data. So what you will do is, there are two options in if you need to do diversification. Understand the difference between equity and the debt market. Invest your portion whenever the equity's optimism is low. Increase your equity. For example, extreme negativism means stock market will decline. That is the time you should enter the stock market, because all the equity stocks, the stocks will be available at cheaper prices. You will enter a lot, and debt market will be start giving more interest. So you should have more allocation from, you should take the extreme great returns from debt market and put it into equity. And equity is going at up, you will transfer the equity returns and put it into debt market. So all these diversifications and handling, you should do it. This is option number one. You need to know a lot about stock market as well as debt market to make money in this kind of thing. Another simple option is put it in SBA Balanced Advantage Fund. This is what they are showing. because optimal asset allocation that will be taken care by the fund manager, lower volatility, dynamically managed between debt and equity market, and tax efficiency as it is equity, 65% will be into equity, and so that is the reason it will be treated as equity mutual fund and taxation will be safe. And they're also providing SWP facility, which is systematic withdrawal plan. You invest a maximum in this fund and you can withdraw up to 6% in a year so that your corpus will keep growing. So ideally this kind of fund will give you around 10 to 12%, and anything above 6% will keep help in compounding, and you can keep withdrawing the amount. But if you ask me, can I take SWP right now? In this category, balanced advantage fund, it didn't work correctly. I will say the capital is eroded in the case of HDFC balanced advantage fund, because HDFC balanced advantage fund changed they recategorized and become balanced advantage as per SEBI regulation, I think from 2016 or 17 some period, and in the last 10 years they had given more dividends, but the case is the capital has got eroded by 10%. Instead they even got equal amount of money as dividend, but capital is eroded. So if you are going for opting for SWP, maybe you should think twice when you are opting for SWP in SBI Balanced Advantage Fund. As I said, the NFO period is between August 12 to 25, and this is what they will do: asset allocation model based on arbitrage, equity, as well as debt based on market sentiments, valuations, and earning drivers. So overall perspective they are taking. That is the reason they are able to give the proper asset allocation. And quantitative framework is value, growth, and quality stocks. Sector preference is taken into consideration, and generating alpha through equity and aim for stability through debt. So that is the ideal advantage of this balanced advantage fund. Okay, so the debt market and equity market conviction, based on their conviction as well as the fund manager, they are doing it. And if you look at, this is the ideal, and they are also including real estate investment trust as well as infrastructure investment trust. So it is up to a maximum of 10% remaining between equity and debt securities, right? So these are the fund managers, three people for debt portion separately and equity portion separately. Overseas investment, so it means equity overseas investment is also possible in this. So an application amount is 5,000 rupees minimum, and in multiples of 1, additional purchase of 1,000, and in multiples of 1 thereafter. So who can invest in this? If you look at investors looking for long-term wealth creation, because volatility is there, and who wants more than 10 to 12%, they can stick to it. And because this is suitable for people who want the right mix of debt and equity, and you should be staying invested for 3 years, minimum of 3 years. As I say, market is at a very high valuation right now, and if you're looking to invest in NFO, particularly these kind of funds, have a period of 3+ years so that you will see some positive returns in your portfolio. And I think this is the right mix. Suppose you are not having balanced advantage fund, so you are having a equity and looking to transfer your fund, maybe this is the one fund category you can look at. Thank you so much for watching. Please share this video with your friends who wants to look to invest in mutual funds as well as specifically balanced advantage fund. Thank you so much.